In this video, we are going through gaps. What are they and how to use them? So firstly, gaps are made up of two candles. So you always have two candles in a gap. Now, how do you use these two candles to determine whether or not there is a gap? So all a gap is, and very simply, is you look at the previous candle's close. So for example, on this green candle, the close is obviously the high because it's a green candle, it's a bullish candle. So that is the close right there. And what you need to see is what is the next candle's, in this case, low. So what you'll see here, and I'll zoom in as much as possible to make this as clear as possible. So we closed here. This is the Dow futures, and we closed at 40,905. So 905 is our close, and you can see right there. Now, what is the next candle's low? What we can see is that candle's low is 40,906. So we closed at 905. We have a low of 906. So there is a point here where there is no trading activity happening. So what this normally means is price has to come down and fill this area. So price has to come and fill this range. So that's firstly what a gap is on a gap up. So again, that's going from a green candle close to the next candle's low. So that is a gap. Now on a red candle, this is going to be slightly different. And we will go through an example of that. And again, it may not always be a red candle. So in this case, actually, this is a good example. This is just a bearish gap. But it's still on a green candle. So what you see here is, again, this is the candle close. So again, this one closed at 40,959. So again, that closed there at 40,959. However, where did the next candle's high go? Next candle's high was again at 40,958. So again, in this area here, there is a 1 point gap once again. So again, we expect price to come and fill this area. So that is all a gap is essentially the previous candle or the first candle's close is not touched by the next candle at all. Not the high or the low, depending which way you trade. In this case, for example, there is no gap because you close here and the next candle comes in to get that close. Again, on this candle here, the trading does not come into this close. So that is what a gap is and how you find them on your chart. You can get indicators coded, and that's what, if you ever watch my videos, that is what these white arrows do. They show you where the gaps are on the chart. So again, this white arrow here is going to show you that there is a gap created there. Again, this white arrow here is going to show you that there is a gap now created here. Now, most gaps will get filled within a minute or two. So these are not really going to be the ones we can trade because you're sorting out risk management on that sort of gap is going to be very difficult. However, on larger gaps created, this is where our trading opportunities will come. And the reason for that is that we can start getting some good risk to rewards. So Dow futures, for example, again, we have this gap at 905. So what did price do? Price moved away. Now we have quite a big area to come and fill because we have to start trading within this area eventually. So what do? We come into the VWAP, for example, and this could be your entry short because we come into VWAP and then we get our nice spike down. Again, this is one massive red candle spikes you exactly to that gap fill, and then price can continue up. Now we'll go through several of these because there is a lot of gaps. We have been trading them on repeat. So again here, a gap range. What happens? Price moves away and then it comes to fill it. Now, finding entries and exits is going to always be the main problem with gaps because you can't just use gaps alone. You have to have some sort of entry requirements and also exit requirements. Again, take profits are normally going to be simple because you take the profit at the gap fill. However, what can be difficult is finding when you get in and where your stop loss should be. So a nice way to trade these can be using things, for example, like a VWAP. So here, for example, you get in at VWAP, you can see how much or where is your target on the on your gap fill. In this case, it's 71 points. So what you could do is you do about half of that. Potentially that could be your risk, and in this case, that is a 1 to 2 risk to reward. and in that case you would have made money. So the thing with gaps is most of them will fill, but in the case they don't fill, you need to know where you're going to have your stops. So again, same thing with this one. Came back, filled it, but there isn't really much of a reason to entry. Price comes here. I guess you could use this consolidation area as a reason for entry, but it can be a bit harder. Now, for example, on this one, we traded this. We had 2 gaps created here and here. Now, how do we find entry? We're coming into the VWAP extension. We got 1 contract early, and what you can see, I'll pull this over from Linktree, is again we got short here, which is in this range here. And where do we take profits? Coming into the gap fill here. So that's how we took it. And again, what was reason for entry? So reason for entry firstly is to target the gap fill, and then we're also coming into the extended range. So again, all we did was kind of get 1 contract earlier. We didn't get normal size because normally we would want an actual touch of here to be able to get a nice clean trade on that. But overall, we are coming into extended areas, and we still need to come and fill this gap. So what we can do is enter here. And again, in this case here, we entered in around this range here, targeting around 34 points. So again, you could use about half of that for risk. So about 15 or so from your entry, which again would take you to kind of roughly around the previous highs. Or that's something you can do as well, is you start seeing this uptrend away from your gaps, wait for there to be kind of a bit of a pullback, a lower high, for example this range here, you place your stop at the high, you target your gap. So overall, finding a strategy and all of that for your actual gap fill strategy can be a bit complex, just takes a lot of testing and starting to know how each product moves, because different products will move a bit differently. But that means whether you're trading stocks or futures, again, they do feel slightly differently. But overall, what this main video was is just to go over the actual gap strategy, which is again, when there's a gap on the chart, we look to trade the fill.